The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Well, good morning, everybody. Excuse me, I'm Tommy O'Brien, coming to you live from TFNN, just after 9 a.m. Eastern Time, Tuesday. Hope everyone had a great Christmas, great holiday weekend. Back at it for a 4-day weekend before we get another 3 days off for the New Year's. And we kick things off with the S&Ps right now. Positive by about 4 points, but we were trickling at about 3,900 overnight. Right now, we're back to basically where we closed out Friday's action. You have the NASDAQ 100 in negative territory, that getting brought down by Tesla of all stocks yet again in lower territory this morning. But we kick things off at about 38.75, and we have 4 trading days left in the year of 2022, folks. Pretty interesting. NASDAQ 100, we jump over 11,071. We were as high as about 100 points higher, 11,182. The lows of last Thursday, about 11,870. We'll see where the market goes. We got the Dow right now up by 78 points. Excuse me, we jumped to commodities. You got crude up 18 pennies. We're above $81 right on futures opening Sunday night. We're back a bit. You jump over to the gold contract. Gold up about $9 right now. You see the acceleration on Thursday from almost $18.30 to $17.92. We rise to almost $18.20 overnight. We're trading at $18.13 right now. You jump to silver up 21 pennies right now at $24.13. And we jump to notes and bonds, and folks, the more time elapses, the more it looks like this is a rejection of that upper channel line. We were talking about it when it's happening, man. We got a rollover, and it's a decisive break, and you're down another 15 ticks right now. In the 10-year, you're down a point and 11 ticks. Pretty similar rollover of the channel line. You extend that top channel line to the right. You don't have to be a star technical trader, folks, to see that channel, to see the rollover. And yeah, it's happening right now. That is going to mean lower prices and higher yield coming at you. We'll see where that goes. We jump over to currencies this morning. We jump over to the dollar index. Dollar right now catching a little bit of a bid. I was going to say we got a green candle, but that's from where we were overnight. You were actually lower to a 103 handle. We're back to where we were on Friday, trading at 104.30 right now in the dollar index. See how we're trading in the euro right now. Euro US dollar. That's quite a back off right now. Yeah, lower rates. Lower price in the euro. We have strength in the dollar. We have higher yield potentially coming at you. And let's jump over to Tesla, folks. Now, we got a lot of China news right now to kick things off, and not good news for Tesla when it comes to it. You have NIO revising their revisions. Let's see how they put it. EV maker cut delivery outlook. That's NIO. Now, they are an EV Chinese car company. Not good for Tesla, folks. It just doesn't stop. And you put this thing on no matter what you put this thing on, right? But you back it up into COVID, that is a decisive break below the 618, man. And yeah, next stop. My dad was talking about it, man. $65 for Tesla. Don't think it can't happen, folks. That's only $65 away from where we're trading at right now. And that's only a few days in Tesla, man. So maybe it's pulling back. Maybe that's a buy. $64. Talk about getting ahead of itself up to $414. And if you think it's just coincidence, folks, that Elon's been selling all those shares as Tesla's been tanking, there are such things as coincidences, some say, and some say there's no such thing as coincidences, right? To any degree. He got very lucky, at least. Folks, where did he go after Twitter? That's the bar, folks. $384 is when he announced he was going after Twitter. Oh, how the world has changed since then. And yeah, he had to sell some shares to make that happen. Yeah. He wouldn't be selling shares, folks, and buying Twitter if he thought that Tesla was undervalued and about to pop. Something tells me even he realized that things were getting a little lofty. It might not be the worst time to start taking some of that wealth and playing with it in other avenues. And yeah, it just doesn't stop, man. My dad got a call last week, I think, at some point on Tesla. Maybe it was Tuesday or Wednesday. And the caller, I remember, he was giving his bearish take. It might have been Tuesday or Wednesday, because I think I remembered it about 145 or so. And the caller was saying it was definitely not Thursday. It was before that fall off. And the caller, he was giving his take, bear take to $64 or something like that. The caller says, "Is it too late to short?" I said, "No," right away. Yeah. might not be too late to even short this stock the way it's trading right now, man. As it's a max pain situation going over there. And yeah, you have Nia cutting, the EV maker, cutting delivery outlook in China. And I don't know where China goes, man. You know, this is more than just a market, but let's get over to the headline. So China removes more COVID travel restrictions with new passports and permits. So the news is flowing, but they're going to start issuing new passports and Hong Kong travel permits to mainland residents as it removes some of the tourism barriers from 3 years of strict COVID restrictions. Government's also going to resume express checkpoints on the borders with Hong Kong and Macau, among measures due to start on January 8th. Not even starting yet, right? Just the potential for 10 years or so. Applications by foreigners to extend or renew visas are also going to recommence. And so this is quite a change and a shift in policy. Today's announcement came less than a day after China downgraded the management of COVID from the top level to the second highest, effectively removing the legal justification for aggressive COVID zero restrictions. So the government is massively changing how they're approaching this, right? But as we've seen in this country and abroad, it doesn't matter what the government says sometimes, folks. It can still impact the economy. And that's going to be the interesting part to see how this matters in terms of shifting to next. What is the psyche of the Chinese over there living under that type of onslaught of media, right? Telling them that 10 cases in the city results in 22 million people getting locked down because it's so dangerous, right? Imagine the general thought. Now, there's two sides to that. You have the general thought of being locked down for 3 years. My goodness, they got to break out, right? There's that thought that I'm sure is in society over there. But there's also the thought in society over there that they've been just slammed with the fact that you can't go outside, you're locked down, 22 million people, testing everywhere. You can't even be risking the fact of running into anybody with COVID because everybody gets tested. So for the first time, they're dealing with those fears of being in public, around everybody. You know everybody has COVID. You're kind of accepting the fact that everybody's going to get it. And then you have to go into things of what happens when everybody gets it a second time or a third time and things shut down, etc. Yeah, and of course, many people on Weibo, which is their social media network, look forward to traveling again. And there you go. Others worry that rising infections will overwhelm hospitals. I mean, there are the 2 points I just talked about. That's the dichotomy that's going to take place in China, man. And it's anyone's best guess how that plays out, but it is an important one in terms of how it's going to hit worldwide markets. You've seen it hitting Tesla this morning. China's public has mixed emotions about COVID zero coming to a sudden end, with some people expressing relief and planning their first trips abroad, while others worry about the spread of infections. Now, it's easy to approach it from our mentality, folks. They have lived under 3 years of the government telling them that if they go outside when there's a single case in a city of 22 million people, you know, that might cause a pandemic to occur. All of that stuff. So think about that as you think that this is just going to be over in China, because that's not how it's going to happen that quick. Yeah, and they sum it up in this article, man. The desire for a quick return to normal life contrasted with concerns about overwhelmed hospitals, which have already come under strain in Beijing and Shanghai. Domestic infections are still rising. Isn't it obviously trying to get everyone infected? And I'd say, yeah, they're basically just opening the doors. And that's probably what you got to do, because, you know, that whole zero COVID policy, I don't know how that plays out, but it's an interesting one. We'll finish this conversation up. We'll talk about what else we have going on in the end of 2022. Stay tuned, folks. We'll be right back in 3 minutes. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P just positive by 1 point right now as the market trickles back to negative territory as we await the open. We get the NASDAQ 100 down about 15. We get the Dow up by 49. We jump back to Tesla shares. Tesla with a 116 handle. You're going to open down almost $7, man, for this stock. Not sure where that ends. Jumping back to the news on NIO. So Chinese EV maker NIO cuts delivery guidance for fourth quarter, citing COVID disruptions. They expect to roughly make 39,000 vehicles after looking for between 43 to 48. No NIO cited COVID-induced supply chain disruptions. Now, here's the deal, man. China opening up isn't exactly going to stop that from occurring, folks, okay? I mean, a lot of the transitory talk that was happening here was after the fact we had opened up, right? You had opened up, but people would still get sick. They'd call out. They'd have their kids get sick. They have to call out, etc. It persists even after you open up. So they have to cut that. That's hitting Tesla in a big way this morning because if they're having it happen, guess what? It's happening to Tesla too, man. They cited supply chain disruptions due to COVID outbreaks in major Chinese cities, which slowed down operations in December. This month, they're talking about, okay? As a result, NIO customers have faced delivery delays. The company said in November that they aim to shorten customer wait times. Not so much the case, man. Yeah. And so that is what is hitting Tesla today, and it's going to be a tough one overall. Now, jump into the cars. CNBC's got an article out there talking about 2023, another difficult year for the auto industry. Yes, we may be over the supply disruptions, but what are we coming into now? We're coming into now potentially recessionary tendencies. And you know what else we're coming into that they don't talk about enough for cars? Is the interest rate, man. You know, yeah, you still have some decent deals out there, but interest rates on cars, say goodbye to the days of 0%, 1.9%, 2.99%. I'm sure that they may be trying to provide those types of deals to push sales out the door, but that's costing them money. So that money is coming from somewhere. If they're offering deals under market rates, they're paying for those rates as it goes. Now, in terms of what you're looking for vehicle sales, 14.1 million in 2023. That's tepidly optimistic, as he puts it. Analysts expect this year's auto sales to total about 13.7 million, and U.S. sales were 15.1 in 2021 and 14.6. So you see the numbers there, right? 2020, you were at 14.6. 2021, as things ramped up, you were at 15.1. And yeah, last year, supply disruptions across the board, 13.7 million U.S. auto sales probably part of the reason why prices were going up, right? What did you have? If you know how economics works, folks, you have a supply curve, you have a demand curve. What happened? The supply curve got shifted, and what did that do? The supply curve gets shifted. That shifts the point where supply equals demand, causing the price to rise of where they intersect. Loved economics, man. In high school and in college, that was one of my favorite classes, economics. S&P Global Mobility expects new vehicle sales to reach 83.6 million in 2023, and that's globally. That's a 5.6% increase. In the U.S., data and consulting firms expect sales will be up by 7% to 14.8 million units in 2023. But the car companies, man, again, Tesla, right? It's a tough spot. They're in like the perfect storm right now. They're dealing with huge issues in China. You have the Elon wild card, which is just all bad news for Tesla shares, at least so far. And then you just have the car industry, and then you have the recession that's going to hit potentially everybody coming down the line. It's a tough one, man. All right, jumping back to some of the China news I was talking about here. Where were we? Let's see. Let me jump around where I was. Okay, this was the article I was reading, I believe. Yes, it was. And just one final thing. You know, if you're living over there, you got to understand the mentality. It is a tough place to try and figure out how they're going to jump back from this, because this quote sums it up. And this is just an internet quote over there on Weibo. 1 month ago, we were still saying we'd stick to COVID zero and put people first because the health of the nation was the most important. And then a month later, we're completely lying flat and letting things go wide open. So that's a tough one to see how society over there is going to handle that. And it's going to take some time to play out, man. That is for sure. And you have Japan is going to require tests coming from reopened China. Why? Because everybody's got COVID over there right now, man. They're going to require a negative COVID-19 result for travelers coming from China as the country throws open its borders from January 8th and abandons its COVID zero policy. Yeah, not surprising, man, because they're in a different world right now, China. They really are. The policy is going to take effect from December 30th. Looks like Japan just doesn't want a bunch of newbie Chinese residents. You can't blame them, man. They're going to want to travel everywhere. In terms of just like we are, travel still a big deal in the U.S. Service is still an area that is the only area that's accelerating in the economy because of that pent-up demand. So it's probably going to happen in China for some time, but is it happening just yet? You know, they're just coming out, and man, they have dealt with propaganda, folks, for 3 years, telling them that COVID will kill everybody. You can't go outside. You got to stay inside. So it's a different deal living under that propaganda in China. Thankfully, it seems like you got plenty of people in China who know that they're living under propaganda and that they shouldn't be living inside for 3 years at a time. But it's very difficult to understand the mentality of people living in China under that type of propaganda. Thankfully, and I'm sure, many people in the U.S. say we live under propaganda as well. Not comparable to China, folks. Not comparable in any way. I was talking about China on Friday. I got comments in the den saying, well, maybe the U.S. controls our COVID numbers as well. Folks, governments are always going to try and say whatever is best for them. Okay, so there is that level of propaganda in any type of government, but comparing the U.S. government in either Republican or Democratic administration to what's going on in China is not a fair comparison in any means, in my opinion, in terms of what's going on over there. Okay. Where are we jumping to next? Let's jump to a little bit of airlines in the U.S., man. I hope everyone had a great Christmas, nice long weekend. Hopefully you weren't flying over the holidays, man. Southwest Air faces a gridlock with over 80% of flights scrapped or late. Operational woes mount even as rivals travel snarls ease. This is where you're seeing a little bit of winners and losers in terms of management, I guess, operational, right? Department of Transportation pledges to look into unacceptable rate of cancellations. Like, how does this happen, right? How does one airline really stick out there? And for the longest time, man, I've been saying, poor JetBlue. They were the winners for so long, man. I love them. And there's your drop off on Southwest, man. They're down $2 on a $36 stock. And yeah, JetBlue. I mean, they almost can't trade any lower. JetBlue, though. Look at this stock, man. Amazing, JetBlue. Would you think that everything going on JetBlue is actually below the COVID lows? Man, let's jump over to American. all these airlines, man, it's a tough deal. American's going to open down only 15 pennies this morning. You got Delta is going to open down about 15 pennies. Yeah, and you got Southwest just basically canceling everyone now. They're going to open at about $34. You have a recent low in October of about $30. Back to the short-term time frame, $34.19. In all likelihood, we'll have another tough day tomorrow as we work our way out of this. That's the CEO. That was on last night. This is the largest scale event I've ever seen. Plans to operate just over 1/3 of its typical schedule in the coming days to allow crews to get into the right positions. Yeah, I mean, when you cancel that many flights, man, canceled almost 3,000 flights yesterday and had hundreds and others run late. It's a mess, man. Yeah, concerned by Southwest's unacceptable rate of cancellations. I mean, how's that happening if it's not happening everywhere else? Stay tuned, folks. We'll be coming back for the open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you shift to slightly negative territory, and we're back to positive. S&P's up by 1 at 3870 right now. The NASDAQ 100 negative by 27. You get the Dow up by 70, and you have the Russell flat right now. We jump to crude, sitting just above $80, $80.03. We get the gold contract up by $7 right now. We jump to notes and bonds. Continuing the trend, lower price, higher yield right now. On the 10-year, you're talking about the 10-year right now, negative by 15 ticks. The 30-year is off a full point and 12 ticks. And yeah, I'm jumping over right now. We're talking about a yield of 3.82%. It's coming at you, man. Boy, if we ever get a run to the bottom side of this channel line, folks, don't say it can't happen, man. You know, if you told people on August 2nd, hey, we're going to be trending to the bottom part of this channel line somewhere around 108 when we were trading at 119, and if you said it, people would say, man, what's going to happen? That's a pretty dicey trajectory. But yeah, it happened. It happened in the span of 2 to 3 months, folks. And that is a decisive rollover at the upper boundary line of that channel line, man. Interesting action. And boy, if we climb down to that area, you're talking about pushing 4.5% to 5%. But here's the part about all of it. All that would be doing is the market finally saying, you know what, we're going to believe Chairman Powell. That's not some astronomical event occurring in the economy, folks. That is just the market, if it trades to that price level, saying, you know what, they're going to be higher for longer, man. Inflation is going to be persistent. Chairman Powell is real here. He is not going to budge until he is sure that inflation is on its way till 2%. I'm telling you, when I heard him talk in the last press conference, and the way he was talking, if he really meant what he was saying, and this is where it gets interesting, okay, because it's kind of this game theory perspective, that if the market believes him, you actually don't have to do with what you were saying you have to do, right? If the Chairman Powell said, we're going to be at 6% for 4 years to make sure that we crush inflation, if the market believed him, he'd probably crush inflation in 4 months, because it would be such a drastic reaction that he wouldn't actually have to go forward with the plans that he had, right? So there is a game theory perspective of convincing the market that you're going to do something, because if it doesn't believe you, then it doesn't even matter what you're saying you're going to do. All right, it's kind of like bluffing, right? Anyway, for what it's worth, I think I made the point there, and you got a pretty decisive rollover to kick things off. We got 4 trading days till we come into 2023, and it's pretty undeniable that inflation, at least at this point, is pretty sticky at 6 to 7%. Pretty interesting in terms of all the market predictions of where we come into this year in terms of that number. All right, what else we got pulled up here? Let's see what I wanted to talk about. Well, let's check back on Tesla before we jump over to the article and see how they're opening this morning. Okay, slight pop on the open. We were in the 117 range coming into pre-market. Yeah, you jump to 118. You're down 3.5% for Tesla shares. You jump over to the Tesla. You jump over to the fundamental tab. $375 billion company, man. Yeah, that sounds like a lot. It's nothing like what it was when you were at, what, over $1 trillion at one point, 414. Yeah, so you're almost a quarter. Things lost almost 75% of value this year. Now, let's jump over to Cathie Wood, man. It just doesn't stop on this one. COVID lows for Cathie Wood, $33. Okay, now she often talks about a 5-year plan. Okay, how do you have a 5-year plan, folks, and you are losing money over a 5-year plan from 2017 to 2022? She's into technology. She's into electric vehicles. She's into telemedicine, right? She's into Zoom. She's into all of that stuff. And we lived through the pandemic. And you're telling me over 5 years from 2017 to 2022, she can't have any price appreciation during that time, or 5-year plan? Be careful, man, because it kind of just feels like she's not giving up on a failing business idea right now. And yes, I'm sure there's going to be some area that Tesla will be a buy. Yes, Zoom is here to stay, folks, But look at even Zoom down 1.5% today. Not sure why that's down, but boy, Teladoc's one of her big positions she's got. Down another 1.5% today from $308. And telemedicine is the future, folks, period. There is no reason that you got to go into a doctor's office to do a lot of what we do. I imagine that's going to be a big deal. But boy, I mean, you're competing with Amazon when you're talking about that in these markets, man. They're rolling. They're rolling. Watch out, folks. We got a super light market right now, and we got a drop off right on the open. Say goodbye to that gap open. I was looking at the futures last night before I was going to bed, and this is a sentiment that I'm sure a lot of people are dealing with, myself included, among many others. And I said, what the heck's the market up 20, 25 points for right now? Think about that mentality, right? What the heck's the market doing near 3,900 right now? That's a mentality a lot of people are thinking about, folks. What is the premise to buy this market coming into a pretty decisive earnings season that all indications point to we might see some real revisions here, because earnings are very difficult when you're dealing with the cost structures that so many businesses are dealing with. And yeah, market's dropping pretty quickly, man. S&P is now off 15 points. And we're off 15, but we're 45 points from where we were trading at 5:30 this morning, folks. And we are dropping like a stone right now. NASDAQ 100, say goodbye to 11,000, 10,981. We got the Dow off 61 points. We got gold up about $10 right now. And interesting that we actually have the 10-year. I was saying to myself, is the 10-year dropping right now? Are we getting a dollar spike? Is that what's doing it? No, that's not what's doing it. This market just dropping out of bed right now, and that is not a result of what's happening right now. You don't see some huge dollar spike or anything like that going on. Interesting. Jumping back to the Southwest story real quick. Let me see if I can find it real quickly. Come on, where are we at? Yeah, we got a couple stories to talk about. Oh, come on. Did I close it out? All right, well, let me pull up this one, because just comparing some of the numbers towards the end of the article, the last point I wanted to get in here. Let's see. Is this it? Forgive me. I'll have to pull it up at the next break. Forgive me. There we go. Okay, excuse me. Here we go. Southwest canceled 67% of its flights yesterday, according to Flight Tracker. That's more than 42% of the flights that it abandoned on Christmas. And by contrast, you have Delta, which only dumped 21% of the flights on Sunday and only 8% of their flights on Monday. So you have Southwest canceling 2 out of every 3 flights, 67% of flights on Monday, and you have Delta just canceling 8% of flights on Monday, along with 18% running late. And one thing they point out is that unlike competitors, okay, Southwest uses a so-called hub and spoke system to funnel passengers. Unlike its competitors that use the hub and spoke, right? You're used to those maps where you have the huge hubs in certain cities and then all the spokes that are running out to different locations that they service. Southwest that's not what they do. Southwest is focused on point-to-point service, flying the same aircraft, Boeing 737s, on trips that may hopscotch around the U.S. So they just jump plane here, versus other airlines using the hub and spoke. And maybe when things happen like this, that's where you get penalized. Southwest is the biggest carrier in Buffalo, one of the hardest hit urban areas of the storm's path. You see some of those Bills fans out there this weekend. And yeah, so that was part of the problem. But guess what, man? That's their business plan, and they're going to have to deal with it. They're going to have to defend it, and this is not all about weather when they're the only ones that have been suffering like they have. S&P's down 17, folks. We got the NASDAQ off 98 points, Dow off 42. Stay tuned, folks. We got a lot more to talk about. We'll be right back in 3 minutes.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&P right now negative by 17 points. How about the NASDAQ dropping pretty quickly off 125? You get the Dow giving up the gains it had pre-market. We just hit 33,300. That's about 300 points from where you were at 5:30 in the morning. The Russell now negative by 12. You jump over to Tesla shares. Tesla now off 6.2%, folks. We just made a new low of 115.40, man. Watch out on that stock, man, because it is just not stopping. We jump over to Southwest, dealing with their woes. Yeah, off 5.3%. We jump over to some of the other airlines. They're negative, but nothing like what's going on with Southwest. You got Delta off about 1% right now. You got American off 1.2. You got United basically flat right now. They catch a little bit of a bid. Let's jump over to some of the banks right now. JP Morgan down about 0.3%. We were higher. You jump over to Morgan Stanley, down about 0.6%. They sell off on the open. Goldman Sachs right now off about 0.6%. Bank of America basically flat. And we'll finish up with Wells Fargo right now off 0.4%. Interesting article on Bloomberg. Is this their big take? It might be. Yes, it is. The big take. Wall Street's big banks score $1 trillion of profit in a decade. It isn't just the scale of profit that's startling, but the industry's ability to push through scandals and thrive anew. That's an interesting part of this one, man. What was it, just last week that Wells Fargo paid $3.7 billion or something like that, folks? $3.7 billion. Now, Wells Fargo, they're in the gray here. $192 billion in profit they have made in 9 years. And they just got fined, what, $3.7 billion for basically screwing over Americans countlessly? Yeah. When you hear the banks, folks, talk about they need less regulation, right? They need to open things up. Remember this. Remember this right here, okay? Because banks are more crucial to our economy than anything, okay? They hold everybody's money. That's the reason why we make sure that they're not run like FTX, okay? That customer funds are protected, that the banks can't just swindle them away, okay? And that they're protected by the full faith and credit of the U.S. government up to, $250,000 FDIC insurance, et cetera. Now, the argument is never going to stop that they want to be less regulated because that's the nature of human beings, right? But remember this chart. You're talking about $1 trillion of profits for just these 6 banks in the span of 10 years, folks. Okay, a startling number. And that is the first $1 trillion decade for the 6 giants of U.S. banking. And yeah, as they put it, that's not revenue, man. That is straight out profit to the bottom line. JP Morgan alone, $293 billion. Bank of America is next at $200 billion, right? Wells Fargo at $192. How does that happen, man? Wells Fargo, the number 3 up there. Then you got Citi at $131. You got Goldman Sachs at $96 and Morgan Stanley at $79 billion. Yeah, in such a haul, it didn't seem possible before the decade began when Wall Street was the target of global protest movement and politicians at both ends of the spectrum were seething over bailouts or aiming to break up too big to fail lenders. Listen, if you're going to be too big to fail, okay, you gotta get regulated. That's the bottom line. because, I mean, it goes with the airlines in the same degree, folks, okay? We saw it happen, right? Part of the money that went to COVID relief was a big bailout for the airlines because we can't let them fail. I want to see a chart like this for the airlines, man, because they made so much money over the last 10 or 15 years, and what do? They gave it all away. They gave it all away, and then when it came for a hard time of a year or two, and folks, if you're running a business like that, you're reaping all the benefits, right? Because you're saving nothing for later. We're jumping around here. And you're maximizing your returns by being over-leveraged, and you're not preparing for an inevitable downturn. If you ran your company like that and you were a private individual, eventually you run into a hard year or two and you go BK. So a lot of people won't run their business like that if they're a private business, because guess what? They don't want to risk going out of business. But what do some of the companies do? Well, if you're run by a CEO that's making $25 million a year and they got $100 million, $200 million anyway, they're not going to go hungry. So why not lever it up, make the most you can. And if things go really, really bad, like, for instance, a recession, like, for instance, a COVID pandemic, like, for instance, God forbid, another 9/11, these things happen, folks, right? That was a 9/11 in 2001. Then we have the 2008 crisis, and then we have a pandemic in 2022. If it happens every 10 or 20 years, folks, that's a real bummer for the American people when you got to bail out the airlines, bail out the banks, etc. Yeah, and like our man Baseball's saying in there, privatize the profits, socialize the losses, man. Remember this chart, folks, okay? Banks, they're doing just fine with the level of regulation. They probably need even more regulation, like we see for the likes of Wells Fargo, et cetera, because they made $193 billion and they got hit with a $3.7 billion fine. Now, there have been more than that, okay? But what is that, folks? I mean, that would be like, you're talking about they could pay $19 billion in fines, Wells Fargo, and they would still be making, that's just 10% of what they took in over 10 years of time for profits, not took in revenue, profits. So pretty startling numbers on the banks out there. Yeah, and look at the years, man. It's constant, right? 2021 was a big year in terms of $170 billion almost in profits. But you're talking about $80 billion of profits each year for these big, six big banks in a big way. Yeah. So that's a big take from Bloomberg. Check it out, man, if you have the time, because there's a lot of good stuff in there in that article. I was checking that out earlier this morning. All right, what else we got going on? Let's talk about some of the stocks that are moving. We talked about Tesla, of course, the market continuing to drop. Let's take a look. Tesla, 6.7% to the south. Kathy Wood off another 4.2%, 29.67. It just doesn't stop, man. We jump around to the big dogs. Apple off 1.7%. I wonder if maybe NIO coming out talking about disruptions. Could that be hitting Apple even more, right? If you're dealing with problems in China, man, everybody's going to be dealing with problems in China. We jump over to Microsoft shares. Looks like everything's getting hit, especially growth stocks, as we have yields rising this morning. We got Microsoft off 1.2%, Amazon off 2.2% so far this morning. We jump over to Google shares, off 2% this morning. We jump to Meta, off 1.5%. We jump to Peloton. Whoo! Off 6% for Peloton. The reason why I bring this up, now they got a low out there. Don't forget that one, 666 for Peloton, the low. And I bring that up because if you take a look at it, Peloton, so they come out, they're going to sell refurbished bikes. That's one of the things that they're going to be doing. Let's see. Peloton is selling refurbished bikes at discounts of up to $500 compared with new ones. This is not the company that it was thought to be at one time. But as a consumer that likes biking, okay, now I like biking outside, and we're very fortunate in Florida that you can basically do that 12 months a year. Sometimes it's a little hot in the summers, to put it lightly. But that's a real attractive proposition, man, because all things considered, if that bike's in pretty good condition, I don't need a new one, man. I don't need a new one at all. You're going to save me $500 for that expensive bike. Maybe I'd go for it. New program is the latest effort to boost demand, following the expansion of its rental program earlier this year. So we'll see where that goes. But some Peloton news in the market. Market don't care, man. Peloton trading down 5.5% as this market falls apart a bit. And we got notes and bonds kind of sitting where they were. You got the 10-year off 11 ticks. Maybe the market just digesting what had happened with notes and bonds in the lead up to the open right now, as you had, that spike higher from 103.95 to 104 and change. So you have a little bit of dollar strength. You have a little bit of higher yield right now. Yeah, you're talking about, what are we at? as we come into this final segment, folks. We're talking about a yield of 3.8% on the 10-year. We got one more segment, folks. Stay tuned. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps down 21 points. NASDAQ 100 off about 135. We got a question in the den. Taking a look at the XLE. Quite a pop today. We're up about 0.6%. We put this back on a 15-minute to see the acceleration on Thursday, down to about 82.50. We're pushing 88 this morning. We're back to the longer-term chart. Putting this thing on a Fibonacci, man, what did we just do? Well, you came down to almost between the 50%. You came down to almost the 382. Basically came down and tested this area that we chopped around the highs of August. We were up to 94.71. We bounced a bit up to 87.57. We put it back a little bit longer-term time frame. Almost a double top there. That's the only thing a little bit dicey. We got up to 93.31 in June. We got up to 94.71 in November. And yeah, I'd see how we maybe trade towards the pop if we get back to that 93, man. You know, you're only about $6 from that area right now. It depends if you're looking longer term or shorter term right now. Because, yeah, it looks like that might be the place we're heading, back to the top of $93 to $94, but we'll see how we trade into that area. As we've already been up there once, and boy, you see the drop-off we had. And you get some drop-offs on this XLE sometimes, folks, and they are steep. in pretty dramatic fashion. So we'll see where they go. But I'd be a little careful here, almost in no man's land in terms of where we're going right now at 87.56 for the XLE. All right, let's check out some of the high flyers or low flyers this morning as we wrap up the program. Yeah, Tesla just not finding a bid, man. Off 6.2% right now. We jump over to Southwest. Whew, yeah, they're off 5.7%. They got some big problems, man. They're going to take some time to work themselves out of. Do we got a new one on Zoom as well? Look at that, man. 63.57. What's going on? No one's using Zoom anymore? Look at that, man. Absolutely remarkable. So that's as far back as it goes? That's as far back as it goes. What did this thing do? This thing went public in April of 2019. Imagine that if you bought this when it went public. And talk about timing. You said, I struck it rich. The stock went public right before a global pandemic. And no, you're going to make no money on this stock. You're right back to where it went public. Remarkable. All right, folks, stay tuned. We got our man Basil Chapman coming up next. We got the S&Ps negative by 20, NASDAQ 100 negative by 133, Dow off 46. Thanks for starting your trading day with me, folks. I'll see you tomorrow morning. Have a great day and stay tuned for Basil. Up next, folks.